Assalamu alaikum wa rahmatullahi wa barakatuh. I hope my sound is clear. Can you please confirm?
Yes, Ahmed, your sound is clear.
Yeah,
You are audible.
sure. السلام عليكم ورحمة الله وبركاته. يطيب لي أن أرحب بكم جميعا في الحلقة النقاشية حول البيانات المالية عن الربع الثالث المنتهي في 30 سبتمبر 2024 لمسقط للتمويل. في البداية أود أن I'm sorry for the disruption. في البداية أود أن أهنئكم بمناسبة العيد الوطني الرابع والخمسين المجيد، فكل عام وأنتم بألف خير. كما أود أن أشكركم وأعبر عن امتناني لوجودكم معنا اليوم، حيث نتطلع نحو مناقشات إن شاء الله مثمرة وبناءة من خلال أسئلتكم القيمة على ما سيتم عرضه لكم خلال هذه الحلقة. قبل أن نبدأ بالحلقة أود أن أعرف عن زملائي التنفيذيين الحاضرين معنا، وهم الفاضل رشاد الشيخ الرئيس التنفيذي للشركة، والفاضل تمار حسن زيدي مدير المالية والحسابات بالشركة. Ladies and gentlemen, I extend a warm welcome to all of you to the MSX discussion session focused on the financial results for quarter 3 ending September 30th, 2024. First of all, I would like to wish you all a very happy National Day, and we highly appreciate your presence here today. We have our colleagues who will provide valuable insights on key topics. Looking forward to engaging in a productive discussion with your valuable questions and inquiries. Before we begin, allow me to introduce my executive colleagues, Mr. Rashad Al-Sheikh, the CEO of the company, and Mr. Tamar Hassan Zaidi, the Head of Finance and Accounts. Thank you once again for joining us, and we are excited to start this informative and interactive session. So the floor is yours, Mr. Tamar, please.
Thank you, Mr. Ahmed. First of all, I would like to, on the behalf of the management, I would like to welcome everyone to join us for the MSX session today. Ahmed, maybe there are some people who are waiting in the lobby. If you can just check. Okay. So basically, this is our third MSX session. The first session was given for the year-ended financial statement for the financial year ended 31st December 23. And then we had a discussion regarding the half-yearly results. And this is our third session. So welcome, everyone. And I would like to wish everyone a very happy National Day. We'll begin the presentation now, which basically starts with a normal disclaimer. So basically, this presentation contains all the statements relating to the Muscat Finance business and financial conditions and the results of the operation, which are already there in the public domain. We prefer not to commit or comment on a future or a forward-looking predictions, which are not guaranteed in terms of the performance of the company. Having said that, we'll go to the agenda for today's discussion, which basically is Muscat Finance history, as you most of the people might be aware regarding the history of the company. Then we will discuss regarding the snapshot of the 9-month 24 performance of the company. We will discuss the overall financial performance for the period ended 30th September 2024. After that, we will see that what are the way forward for this journey, and then the presentation is comprising of the annexures as well. As most of you are aware about the history of the company, but we prefer to just recap for the history for those who have joined us for the first time. Well, Muscat Finance is the first NBFC in Oman which has introduced and launched the corporate lease schemes. Muscat Finance is the pioneer of vehicle financing, equipment financing for retail and corporate customers. From the year of incorporation in the year 1987, after 8 years, the company was registered on the Muscat Stock Exchange. The company in the year 1996 introduced the capital finance schemes for the SMEs. In the financial year 2011, Muscat Finance achieves 500 million cumulative debt factoring turnover. However, moving forward for the year 2013, the Muscat Finance raised a 7 million non-convertible bond, which was a part of a strategic move to diversify the funding needs of the company. In the year 2019, the company basically had a partnership with Omantel to offer a seamless payment capabilities. The year 2024 is basically marked as a year of transition, where basically the company has appointed a new leadership, specifically if we talk about the Chief Executive Officer, Chief Digital Transformation and Technical Officer, Chief Risk Officer, and Chief People Officer. In the year 2024, we have noticed a 42% quarter-on-quarter growth in the business volume as in relation to quarter 3 of 24 versus quarter 2 of 24. The new drive-through experience for the customers was introduced. A manless kiosk was added in the building. We basically moved to state-of-the-art newly acquired head office in Sultan Qaboos Street, Bowsher. The snapshot for the 9-month 2024 performance will basically give an overall overview of the performance of the company. As mentioned, that in 1987, Muscat Finance is the first NBFC in Oman, and we are basically having a rating of OMA negative long-term and A2 short-term, which basically depicts a favorable position for Muscat Finance. The net investment in the finance debtors has amounted to 97 million as at quarter 3 2024, as in relation to previous year comparative of 94 million, which basically shows that there is a hike of 2.6 million, which represents 3% of the overall growth in the net finance debtors. Our products basically includes vehicle financing, equipment financing, working capital, home plan, factoring. The total income as at 30th September has amounted to 7.21 million, as in relation to 6.9 million of quarter 3 of 2023, which has again increased by 3%. The net interest income has amounted to 4.03 million, which has again hiked up by 185,000 as compared to Q3 2023 by 3.8 million. Muscat Finance is having a network of approximately 6 branches, which is basically located in Vilayat al-Barka, Ibri, Salala, Sur, Sohar, and Nizwa. The corporate deposits as at 30th of September has amounted to 21,311,000, which were basically amounting to, which has basically increased by 5.5 million, representing 35% hike as in relation to the Q3 2023, which were amounting to 15,791,000 in the comparable quarter for 9 months. The bank borrowings has amounted to 33 million. The provision coverage is standing at 68%. The provision is basically amounting to 31,880,000 as at 30th September 2024. Muscat Finance promotes the national visions where the Omani workforce has amounted to approximately 90% of the total workforce that we have, and the female employees are more than 40%. We have a strong equity base, which has amounted to 38,590,000 as at 30th September. The leverage ratio as at reporting date is 1.92. However, the allowed limit as per the Central Bank of Oman is 5, which basically allows us to grow our book The new thing that what we have done in the year 24, as mentioned earlier, is that like we are having a drive-through experience for our customer to have a one-stop shop, which basically resolves the customer's queries and provides facility to our customer at a one-stop shop. Then we have the manless kiosk. We have introduced the new products, and we have moved to state-of-the-art new head office building in Boucher, which is basically our intention to serve our customer in a better way. Now, we can talk about the overall performance for the period ended 30th September 2024. These are the highlights, basically. If we compare the net finance debtors, which has increased from 94 million to 96 million, which represents 2.6 million increase as compared to the previous reportable period. The company has grown its business volumes, which is the prime focus of the company's leadership, which is basically a 42% hike as compared to previous quarter of 2024. We have increased our deposits by 5.5 million as compared to previous year with the same reportable period. This is basically a strategic move of the management where we have diversified our fundings. The company has maintained a provision coverage ratio which is greater than 65, and the company has been prudent in providing the ECL provisions. We are the second lowest leverage ratio in the industry, and we have maintained that. We are having basically the lowest increase in the cost of funds as compared to the industry. As mentioned earlier, the operating income has increased from 6.9 million to 7.2 million for quarter 3 2024. The operating expenses, however, have increased from 5.1 million to 5.4 million. This is primarily because of moving into the new building, which is basically requiring us to have depreciation on the self-owned building. Other than that, the full occupancy of the employees and the positions which were vacant in the year 2023. However, we are looking at the benefits which are flowing to the business now and going to be evident in the near quarters as well. We have maintained adequate provisioning for the ECLs, where the provision has increased as compared to the previous reported of 1.1 million to 1.3 million, which basically has raised by 16%. So now what is the way forward? Under the new leadership and the direction of the board, we have decided that we will grow our volumes and we will introduce the new product. We are keen to gain the market share with an improved yield. We are focusing to have more collections and recoveries where we have decided to manage the stress account efficiently. We are managing the employee cost and the overall overhead cost of the company. The management is keen to have a fund diversification and deposit mobilization. We are of the opinion of increasing our fee income aggressively, which will basically be seen in next coming quarters. Ahmed, maybe there is some problem. Let me see with the file. I'll stop sharing for a while, please.
Okay, Tamam, please.
Yeah. Yeah, let me share my screen again, please. Yeah. Now these are the annexures, which is basically the organizational chart as we are complying with the highest standard of corporate governance. The organization is run by the directors and the management, which is basically accompanied by the Risk Management Committee, Audit Committee, and ENRC. This is the snapshot of the statement of financial position for the quarter ended 30th September 2024. If you see, the cash and bank basically has increased from 1 million to 1.1 million. Again, the net investment, what we have discussed, from 94 million to 96 million, which is basically the main focus of the business to increase in terms of the volumes. The share capital remains the same, and the overall equity is still at a strong level from 39 million to 38 million. As mentioned earlier, the corporate deposits from 15.7 million has increased to 21 million, which is basically an increase by 35%. The overall asset base has increased from 99 million to 102 million, and the net asset per share remains almost at the same level of 126 paisa. For the statement of profit and loss, the interest income, as mentioned earlier, has increased from 6.3 to 6.6, which is primarily on the account of increase in the business volumes. We have tried to keep the interest cost to an acceptable lower level. That's why that we are second in the market in maintaining the yield. Net interest income is basically at 4 million, which has increased from 3.8. The overall expenses where it has increased is the depreciation from 17,000 to 152,000, which is a net increase of 135. The overall expenses which the company is managing overall is 2.6 million, and the net increase is 224. The company has maintained a profitability for quarter 3 at 368 as in relation to previous year of 747. Yes, here is the end of our presentation. If anyone is having a question, we are more than happy to take it. Please.
Yes, Mr. Joyce, you can go ahead, please, your question.
Thank you. Thank you for the presentation.
Yes.
One of the strategies that you have mentioned about increasing your profitability is primarily about fee income growth. So how are you planning to improve your fee income in the future?
Mr. Joyce, thank you for the question. It is not only the fees income which will basically help us to increase our income. The management as of now is very much keen to increase the volume basically. And fees income is a small portion of it. So definitely we are basically looking at increasing the fee income aggressively, but the major income would be generated from the overall increase in the volume. That's what we are expecting. If you would have noticed in the presentation, we have mentioned that the business volume has increased by 42% from quarter to quarter, which basically shows an intention and keenness of the management to increase the volume, which has basically helped us to increase the revenue. So that's basically the strategy we are following at the moment.
But when we look at the net loans and advances, the net book, we are seeing a decline from the end of last year, from 92 million to 91 million right now, 92 million, stable. So, how are you achieving this volume growth? You said 42% compared to previous quarters. So, could you please explain that aspect of it?
Correct, definitely. If you just notice, the net investment in the finance sector were amounting to 94. The net increase what we have booked so far is 96 million. So basically itself, if you see the net investment, which is after my ECL, after unmatured finance portion of it, is basically 2.6 million in this quarter itself. So basically, yes, you are right that as at year end, what we remember that there was a dip in the net investment in the finance sector, but as of now, based on the current strategy, we are expecting to cross that number. And if you see all alone together, it's 96 million as at 30th September. So yes, we are confident that the books will keep on growing.
So which are the areas that you are seeing this growth coming from?
This is more, major increase in the volume is from the vehicular side of the business.
Hi, Joyce. How are you? This is Rashad. I'm the CEO. Just if I can add, Tamar, just a couple of points here. See, Joyce, our strategy, we're looking at granular growth. We're looking at probably smaller tickets where risks are diluted, where the yields are better. And we're focusing on growing the retail segment. We see the market is showing positive signs, and we're trying to take a bigger sort of market share as compared to the past. Having said that, we're also looking at focusing on the corporate side, more on the medium-sized tickets. Again, also the yields have historically been better in that segment. So it's a bit of both, but our main focus and driver is our retail business. Does that shed some more light, Joyce?
Sure. Thank you for that.
Thanks.
While you're will be focusing more on the retail grown segment, how's your NPL behaving? What I'm seeing is, from 35% at the end of last year, we are standing at almost around 37%, right? 36.5%, 37%. So how are you planning to tackle this challenge?
Yeah. Maybe Tamar, you want to
Yeah.
address?
Definitely. Just give me a second. Yeah. Basically, if you see, we have a bifurcation of all portfolio into stage 1, stage 2, and stage 3. So we have been conservative over the period to provide the ECL for the stage 3. So that's why, if you would have noticed that it is approximately 68% the coverage what we have provided till quarter 3. However, the major of the portfolio, which is approximately 80% of the total portfolio, is in stage 1 and stage 2, which is amounting to, as at quarter 3, 83 million out of the total portfolio of 128. Joyce,
Yeah, Tama, but my question is, your NPLs are growing, and coverage ratios compared to 70% in end of year is coming down to 68% as we speak. So, how are we managing this volume growth? And you're talking about retail, probably, where we are likely to see higher amount of delinquencies. So, my question is, how are we planning to strike a balance between, all these aspects?
look, we as you know, mentioned by the CEO, we are trying to have a much better business as compared to previously, where basically we are trying to target a lower risk in terms of a lower risk business for the retail, for the vehicular part of the business. However, we have been very selective in selecting the SMEs exposure. So over the period, yes, you are right that the overall slippage to the stage 3 has increased, but we have been prudent in providing the ECL provisions on that. So we are having a very selective approach in terms of selection of the business for the corporate SMEs and the vehicular business as well. So maybe that's the response to your question. That's how basically we are managing, being very selective in selecting the SMEs exposure at the moment.
Okay, got it. And what's the proportion of provisions that you are likely to take for on an annual basis on the gross loans? What I'm seeing is, probably around 1.5% in second quarter, 1% in first quarter. So, what kind of provisioning expenses should we see?
Look, as of now, if you have noticed till Q3, we have provided a direct hit to the profit and loss account of 1,345 as of September. So
Yep.
as of now, as mentioned initially, we are not in a position to commit or comment the future prediction. But yes, we will comply with the IFRS requirement and the CBO norms at the same times.
All right. Thanks.
Yeah.
On the liability side, what I'm seeing is you're keeping your borrowings at stable levels, but you're focusing more on the deposit growth, corporate deposits.
Correct.
But why are you doing that when you already have a sufficient level of headroom for increasing the debt, and we are not seeing significant growth in the assets? So my point is, you're increasing your liability side, you're very aggressively amassing deposits, but at the same time, the asset growth is lagging behind a little bit behind the liability growth. So, why are you focusing more on the deposits, and what's the right level of mix for you in terms of the bank borrowings and the gearing ratios? You said you're the lowest leverage company.
Yeah, we are the
So
second lowest, basically.
yeah, okay. So what's your comfort level in that?
Look, the overall borrowings, if you see, it has not moved much if you see in terms of the bank borrowings and the corporate deposits. Let me just give you the exact number what we have reported. If you see, the bank borrowings were amounting to 38 million in Q3 23. However, the bank borrowings, short term and the long term, is amounting to more or less at a lower level of 33 million. So from 38, it has reduced to 33 million, which is basically a dip of 5 million. However, this 5 million dip is basically been, countered by a corporate deposit increase by 5 million. So it's basically a strategic move to have a more diversified funding, not to just simply rely on one source of funding, which is basically our banking lines, but to have deposits as well in line, which basically helps us to diversify the funding. Uh, Other than that, obviously the business books have grown. So at the same time, my payable, because it's a dealer-driven market, my payable to the dealers also increases. So that is the reason that you could see an increase in the overall liability. However, near to us and as per our understanding of the financials, it is more in a comfortable zone as of now, I would rather say, in terms of the diversification of the fundings. Yeah.
Got it. Thank you. And where do you see the NIM rates moving? Would you be seeing any improvement in NIM over the next couple of years, or even next year? What's your outlook on that?
Can you repeat the rates for?
The net interest margins?
Sorry?
The net interest margins?
Yeah, the net interest margin, we are basically, that the Fed has reduced by 50 bips and then again by 25 bips. So we are basically expecting a reduction in the interest expenses over the period, because in this market, as of now, it has not been fully implemented, but we are expecting some relief in terms of the interest expense over the periods. However, the interest income, due to increase in the business volume, we are expecting it to grow. And by increasing, as initially mentioned, that by increasing the charges over the loan, which is basically our fee income, so that would basically help us to manage and have more net interest margin.
Okay, so you are saying your cost of funds are likely to come down in the future. So how
Yes.
do you see the yield on assets? Now, right now we are talking about maybe around 9.3%. So where do you see what's the general trend that we are seeing in the asset yields? At what price point are the new loans are coming in?
Look, all the new loans, what we are booking, as mentioned, that we have been very selective and we are trying to book those loans at a better and improved yield. So
Okay.
we are expecting that the yield would also improve over the period.
Okay. Okay. And how flexible? What's your flexibility in terms of repricing the loans? Is it very flexible, or just you have to wait for a longer period of time? How is it? What are the dynamics of the market?
Mr. Ashad, would you like to take this question?
Yeah, Joyce. See, in terms of repricing, all our internal agreements allow for repricing, and we believe that we'll be in a good position if we indeed want to reprice the portfolio. There are avenues. Now, the other side of that coin is that when you do a net repricing exercise, sometimes you lose some assets to our competitors. So we have to strike a balance between adjusting the yield of old booked assets and book size. However, just to add on what Tamar was saying, we took a conscious decision from the beginning of this year. We need to always push the yield up month on month. And alhamdulillah, we were successful in increasing the yield month on month. And there is appetite in the market, and we have seen a growth of lending coupled with better yields. Now, in a scenario, as Tamar mentioned, I think everybody knows that the funding cost, hopefully, fingers crossed, will trickle down from the banks to the finance companies, which will open the space in the NIM. So in terms of profitability going forward, we believe that the market dynamics is positive for a better NIM going forward. I hope that answers your question.
Perfect. Perfect. Thank you.
Thank you.
Yeah, that's it. That's it from my side.
Thank you, Joyce.
Thank you, Joyce. Just, if there is any other questions, please go ahead and you can ask if anybody else. If there are no further questions, then I kindly request your permission to conclude this session. So if there's no questions, we are concluding this session and looking forward to seeing you all in our upcoming sessions, inshallah, in the future. Thank you and happy National Day again. And have a nice and lovely holidays ahead, inshallah ta'ala. Thank you, gentlemen.
Joyce and Mana, for joining us. And we'll hear you soon, inshallah, again.
Sure. Thank you.
Thank you, Mr. Joyce. Thank you, Mana. Thank you, everyone.